last week we had not that much movement in the market. From my perspective, I was mainly focused on gold, and there was a couple moves that I was able to catch on gold. So I will go over that right now, and then we can jump to NQ, and then possibly we can then jump to some questions and whatever you guys want me to look at. So let's start it. So we all had a little bit of a different bias coming into the week. A lot of us wanted to see sells. I know a lot of people wanted sells down into these lows. And, we did forecast that at one point. So I just want to go over why, we ended up switching our bias to bullish in a sense. So let's just go over the higher time frame. Let's look at the daily actually. So when you see that this low has got taken out, we know that we induce sellers into the market. And yes, we know that this is also our inducement high. But just because we take out that high doesn't mean that now we need to come and take this low out. Because price needs to engineer liquidity at this low for there to even be, any sort of resting orders or resting liquidity in that area for it to be a future target. So since we do induce buyers above here, the framework that I'm looking at it from is there's going to be a potential internal that should be taken, because now we need to induce sellers into the market so then we can buy back up. So since we induce buyers, we need to then trap the buyers. So the inducement low was here. Buyers were trapped here. And now when we're looking at it from a framework perspective, we can say what caused this sell-off to happen. Price action from the left. This. Now I'm not saying that we could potentially take out this high next week, because I don't know, I'm not a mind reader. So all I know is we had a false sell-off off the back of a reaction coming from this area. So now when I look at it from a higher scale, we can refine where we got that from. So we have that false sell-off, that false move down, inducing sellers, and it's respecting this area here. Since it respects this area here, we need to see prices move away for there to be some sort of engineered liquidity there. So since we induce sellers at the low, we now have seller liquidity at these highs. Why? Because sellers are selling this thing. We have, retail POI, order block, whatever you want to call it. You see how we're reacting off of these levels and having this little small buildup, and then we move away. That's letting you know that retail is selling this. So now that I know that we have seller liquidity at these highs, that lets me frame out a bias of being bullish. So whenever we're going to go to the lower time frames, we need to then factor out what we saw on the higher time frames. So we can't be induced by just any sort of push up to induce us to trade the other way, because we framed our bias out by seeing what was happening on a higher time frame. Remember, we induced these sellers, and then seller liquidity is here because we could potentially see price giving false reactions at these areas. So once we trade into this area, let's look at Monday. So we're going to start off on Monday. Monday was just mainly a continuation from the price action that happened on Friday, like when we had it here. Sellers were induced here. We mitigated that liquidity block to below. Since we mitigated that liquidity block below, we then induced sellers by taking out these lows. So now we also had a LB here, and if I go on 15, I can show you. It's very, very much cleaner on there. If my chart will load. Okay, the chart's actually not loading. That's terrible. Okay. Let's see now. Okay, never mind. So my connection is actually retarded right now, so we're just gonna frame that out for you guys. That's LB there. I'll mark it out for you. If you can't see it, it's very intricate, but on the lower time frames, it's not as intricate. So we come back and we respect this area. Yes, it looks like we're trading with structure because we take out this high. I can understand, most of you might be confused and say, hey, we took out this high though, so why would I want to be buying from there? Me necessarily, I wouldn't want to be buying, aggressive from these levels just because of the fact that I personally think that it's very aggressive to buy in these levels without waiting for confirmation. So here's my point of view. We take out the high, yes, but then we had this pause before we take out that high. We created that inducement low. So since we gave an inducement low before the liquidity low, we now know that this is not what's structured essentially. So we come up, pause, come down. See how we take out this low here and then form a new low to high. Since we form that new low to high, and then you have to also remember, we took out these lows, which created this liquidity lock low, and we have these highs to target. So that lets you know that I don't want to be selling nowhere in this area. I just need to see some sort of internal taking. So he said try a 5 minute. 1 second, I'll try it. See how this feels. Perfect. Okay. So as you see, that LB right there, we had to push up, push down, and price ends up running for all this internal liquidity before it. Me, personally, I probably wouldn't have dragged this all the way out just because of the fact that I don't really need to see all that taken. You might end up missing the entry. This is very, very intricate. You see how you barely get tagged in. But on the Monday, price action does this. We trade higher, inducing buyers, and then trap them. But we're still in that LB. So that essentially would have been a valid buy. But look at the timing. Me personally, I wouldn't have taken this, but still an opportunity with the system to take into these highs. We were targeting those inducement highs earlier from Friday. So that's how we would have framed that out. Okay. Now, let's go over to later on the day on Monday. We didn't end up doing anything. I remember we were on a live call and we were potentially waiting for something to print on the lower time frame, but there wasn't really anything. We just kept inducing lower and then respecting lows. So see how we traded higher here, inducing buyers, and we come up again. We then end up taking out this low. Why is this low of significance? Just because of price reacting off of it from here. You see how we react off of it there, and we take out a high, inducing buyers. So that lets me know that low was of some significance because we created a build up there. So since we created a build up there, I know that we could potentially look for something in here. But me personally, there was not going to be anything for me unless it was a clear confirmation. Because you can sit here and argue, but this is hindsight. Like, we have this here, But in live price, are you gonna take that? Like I probably wouldn't have taken this just because I would have also wanted to see price come here, come back, return here, respect. In this scenario, stop and then take out some internal point here, and then use this as my liquidity block to then trade higher. But we don't get that, so no trading on Monday for me. And then we get, where's Tuesday's price action? Okay, so Tuesday, we ended up trading into this area here from the left, those inducement highs there. So let's mark that out. Let's have that marked out so we know where that is. We trade above this high, inducing buyers. So now we get price action to come all the way up. We then have this sell-off at these lows, inducing sellers. So now that I know we respected this area to the left, inducing sellers off the back of that area, now I know that we could potentially see some buys. So all I need to see is some sort of confirmation now. Also, I can refine this a little bit more to here. So remember how I used to say, whenever we induce sellers or take out liquidity from the left, we form that LB. So we form that LB. We have our inducement high here. We didn't take it out, which is something I do like to see. As you can see in the previous webinars and in the days, we have the reactions there. Notice how we have the reactions there, and we don't take out the high. So, yes, we see price. Some people can be confused because we see price sweep this and create an LB and then move away. Just because we've taken out this high from this low to this high, I don't want to be buying from this area. Although it's an LB, I don't want to be buying from it because we had that breaker structure in the market, so retail is looking to buy that. So that LB would essentially be a trap because price needed to induce liquidity for us to engineer it. We had no engineered liquidity at these highs, so this move up was for price to respect the highs to the left. So we respect the highs to the left, inducing buyers, and then we induce sellers by trapping them. And then there's the entry I took on Tuesday. I can't lie, I was a little bit nervous just because of the fact that I thought, it's right there, an inch away from stop loss, so I really thought this trade wasn't going to work out, but I've taken many of them that look just like this, so I was actually very confident in pressing the button. So we ended up trading higher, and I also took this on a CFD FTMO account, but I did not hold, and I keep kicking myself for not holding because I'm so used to trading futures now, and I usually just get out at full target. So full target was really these highs up here, just because I know that, hey, we're selling off the back of these highs. I want to be able to target those higher time frame highs. So I would frame it out as a swing position as here. I take 50% off here, or aggressively I would manage 75% depending on which account I'm trading. So we ended up coming lower, taking these lows, respecting this area, just coming higher, and then on Wednesday, here's what we have. We trade higher above these highs, trapping sellers. See all this seller liquidity, we ended up trapping sellers. So then, once we trap sellers, there was a potential counter bias entry, but I potentially wouldn't have taken it just because I'm still bullish and it's just high risk. So we respect this low. Notice how we respect this low, have that reaction. Here's our inducement high. We take out the inducement high, LB above, engineer liquidity. That's a potential short, but the RR might not even be there, so it's not even worth the risk. But you can see the model on a smaller scale. Since we do that, we now induce buyers now. We could potentially see price move back up. So we ended up taking out this liquidity from the left. Why is this my liquidity from the left? Because we had this high from the left here get taken out from this price action. So, me personally, I would have wanted to see this on the 15 minutes. You know, I actually did not see this in a lot of time, actually, because this is actually what I did want to see. We have LB here. I completely overlooked this. I can't even lie to you. So we have LB here. Notice how we're having this pause before our inducement low. So this whole area is reacting off of price action from the left. You see how we got that respect and then move away? So we create that buildup before our liquidity block, validating it. So we also have this pause before we take it out. Notice how we induce higher, trap them. For me, there was no confirmation entries, and I would have waited for just a confirmation to take this, but I wasn't able to. Still a potential entry that you could take. But me personally, I would cover this stop loss right here. I would cover this LB low. Just because, looking at it, my bias, my forecast, I had price coming below this low. But now that I look at it, it is an LB. But personally, I would still cover the lows to the left. It just feels more conservative in my opinion. Especially if I'm targeting these highs to the left as well. There's no sweat to just target that. So that was that one entry there on Tuesday. This is Wednesday, sorry. Wednesday. Not really any clean price action to go off of. Let me see. Gotcha. Sorry guys, I was pulling up the chat. My phone keeps dying. Okay. So we ended up mitigating that LB, trading higher, respecting these highs to the left. We respect it, move away to the downside, coming back into this LB area. So we came back into the LB area, but there was like no internal for me to frame out a potential inducement low entry. So we come lower, respect that area, come to this high. Now that I look at it, this is also a potential entry that I missed. So we have this low here, which is our LB. We pause at the inducement high, which is what I like to see. Pause at the inducement high, and then this is kind of intricate, but see how we take out internal? That inducement low right there. There's your entry. Still high risk in my opinion, just because of the fact that there was no internal here for me to frame out that there was liquidity from the left that was taken. So that, in my opinion, that trade right there would be high risk in my opinion. But in any case, I would still take it, depending on the buffer on my account. So we then also come to these highs that we're having to build up at. We respect them. This whole area. We respect that area, have a false sell-off, inducing sellers. but engineering more liquidity at the highs for people to buy. So we take out that internal low, form that LB. So we form that LB here, come up, take out this level of internal, then we induce buyers. So what we like to see is when buyers get induced, we want to see them trapped. So when we trade above this high, we also react from this inducement high. And then now we want to frame out this low. Why this low? That low is not our inducement low because from low to high, we had that BOS inducing buyers. And what we have below, LB entry there. What is this? And this is New York time. Thursday, this is on Thanksgiving too, man. Bank holiday entry. Imagine. So, there were 4 potential entries on gold throughout Tuesday from this range after reacting from this inducement high to the left. So after we reacted off of that area and we have that false sell-off, just wait for price to build liquidity like these examples did, so you can end up finding the buys back up. We just need to see sellers induced, some sort of engineered liquidity in the market, buyers, early buyers induced and them trapped, and then some sort of liquidity block below to support the entry. So I was only able to be involved in this one here, but I had full targets at the structural high. So unfortunately, I wasn't able to hold this on my FTMO, and I wish I did. Now I'm completely gutted. I can't even lie to you. So that's gold. Let's hop on NQ. I don't really think there was anything on NQ. Not gonna lie to you guys. I'm looking at it right now, and there just looks like there's nothing to go over. None of this price action was like valid for me in any case. I know there was an entry. I think that was last week though. Marco had, and I can probably go over that. So let's see. So we're in this range here. We ended up respecting these highs after having a false sell-off. We had a huge sell-off respecting these highs, taking out internal. This LB, not LB, this inducement low here. And then we also have LB below. So you guys know I don't like really taking aggressive entries. I'm not going to take an aggressive entry off of this. So what I would do is look for a confirmation. And then let's go to the 1M. Alright, so here's what we do. From this high to this low, we have that BOS to the downside, so this will be my inducement high. Frame that out. So, we trade up into this area, respecting it. We respect it, move away, taking out some sort of internal here. And then we come up. Remember, when we take out that internal and we induce sellers, we create our LB. So, we trade above into this high that's inducing sellers. We're respecting it, which we like to see. We respect it, we take out internal. And then the internal point, we also take it out as well from here, which induces buyers into the market. Have a trap or our inducement low. And then your entry. Covering LB. That's how you use the system to build logic. You want to see what price is doing as far as respecting these inducement highs, having that false sell-off, and look how we induce buyers and then trap them. Those are the confirmation entries I like to see, and then we just target the rest of the liquidity that was these highs. Now, if you were on CFDs, you could have held this to the higher time frame target, but unfortunately, you know how that goes. So that would have been a 5.76R. Check Friday last week. Let me see. But wasn't that when CME was down? Or are you talking about last week? Like, hold on. Oh, like November 21st last. Okay, cool. Okay, where am I? Late in the evening. Okay. So I know we had these highs that we were respecting. Friday. What I can frame out here is we took out internal, and we were still respecting this high. Off the back of that, traded up. Now we come down, traded up into the liquidity here, building up, and then we respect this area. Nothing. I don't really see nothing too clean for me, honestly. I'm probably missing something, Adam. Like, I actually don't see it. After this low is taken, 1050. Oh, I see it. You're talking about this. Induce higher. Something internal on the lower time frame. Okay. Yeah, I see. And you also have this too. Take out this low. Boom. Put your entry there. Me though, if I would have taken this, I would cover these lows. I would still cover these lows, just in case, because I would feel like I'm late or I'm chasing an entry. So, nothing really for NQ. So I just want to go over some questions if you guys have any questions or any other pairs that you want me to go over. We can go over some FX pairs if you guys want to as well. Alright. Anything you want me to go over, Adam? Because this week was really a pretty short week, I can't even lie to you. So, there's really nothing else as far as gold goes and NQ goes. UJ? Alright. You want to know how you can tell when somebody's being trapped? Okay. Let me draw something for you. Okay. Let me move this. Sorry, let me move this real quick. Alright. From this perspective, we see that buyers are induced, right? Buyers are buying this thing from this low. We have liquidity resting below this low. Once price then makes its way down here, buyers are now trapped. And liquidity from the left is taken. So we want to see something form in this area to potentially buy back up because sellers have been induced. So this will be that sort of build-up that price has created. We probably respect it, sell off, and then boom. My drawing is terrible, so don't quote me from that. I just want to know, can you show examples and inducement from the left? Give me 1 second, let me go over EJ. Alright. Okay, let me look at this. UJ. Alright, so what we do here is sell off. And then we take out this inducement high. Actually, it doesn't look like we're taking it out, actually. It looks like we respected that. So, price comes at this inducement high, respects it, moves away to the downside, taking out inducement low, respecting LB, and then we move away. Price then does this. We take out this inducement high here. We then take out the low. So now we can see it from a daily perspective. So for a confirmation entry, I probably would have wanted these lows taken because this is my inducement from the left, but in any case, the inducement low is taken, so it doesn't matter to be so intricate with it. So once we trade below this inducement low, what do we have? Sellers are now induced into the market, so now we can see price trade above these highs. So once we end up mitigating this area, respecting it, and we move away by taking out these lows. Why this low? Because that low to that high induced buyers by taking out this high, breaking structure. So that is a scenario of showing you how buyers get trapped. Can we trade above here? React at this high, take out these inducement lows, take out build up, form that LB. We respect the highs that sellers are getting induced from, and we move away, taking out internal liquidity taken, liquidity block mitigated, price moves up, and now what we're having is just price reacting at this area. Okay, let's see. Let's look at the 4 hour now. Some intraday time frames. Okay. Hold on, I'll get to your questions. Just give me 1 second. Let me keep breaking this down for you. So, we trade all the way up, inducing buyers, yes. So now we're trickling down. So to come lower, we have to induce higher to come lower. So we induce higher by taking out this high. Have that BOS in the market. And then what we have here is some sort of inducement high because we reacted from these lows. We had this build up from these lows and then this whole push down. So from high to low, we induce sellers because what do we do? Had that break structure. So I would drag this all the way out, letting me know that that's liquidity in the market that I want to see taken. And what do we have above? A liquidity block. So we can say that price has been respecting this inducement high. Notice how we have that sell-off to the downside after respecting this. Taking out inducement low. And we have what there? That's LB right there. Because high taken, low taken, liquidity block. So, this is Wednesday. That's a potential long right there. And he would be targeting these inducement highs. So here's a potential long. Okay, now what do? We respect this high from the left. Have this sort of build up, taking out this high. We take out the high, and then all the lows that we're respecting from it. And then we just start to induce buyers here. So we could potentially see this low taken next week, and then a push up. But I don't want to go into predicting because price can just respect this, leave it, take out this high, and then have a sell-off. I struggle with the higher time frame narrative. Are we looking for inducement highs or lows to be taken to form our bias, or are we looking for BOS to determine our bias? So, how I determine the bias is this. You have to pair everything together. So when you look at this chart, what do you see? You see sellers have been induced. Okay, that lets you know that sellers have been in the market. We do not want to be selling this thing until we see sellers get trapped. So sellers would be necessarily trapped above here, which is this inducement high. So until we take out these highs on a higher time frame scale, sellers selling in the market on a higher time frame scale would be high risk. So notice how we come into this red area, and then we have that fierce sell-off to the downside, inducing sellers, taking out what? Inducement low, trapping early buyers. So we trap early buyers here. This lets me know that we're still bullish, just because of the fact that we have our inducement high target and we induce sellers. So I'm still bullish until this high is taken. We respect the liquidity block. We trade above. Don't get induced in none of this price action, because once we induce sellers, all of this should be reactions to false reactions from the left. It doesn't matter if it's a liquidity block or not. Even if this was a potential liquidity block, it still should be false reactions because of what we did on a higher time frame by inducing sellers. So that's basically how we frame out a bias. And same thing if price was inverted, if buyers were induced, we'd be looking for sells. Can you show examples of inducement from the left? This high right here. This high right here is your inducement from the left. You see how we're right here, we induce sellers here, and then we return back and induce sellers again. We have that reaction. So that lets you know that that's your inducement from the left. How do you determine where is inducement high? Meaning it can't be lower around 149. Cause the sweep. What do you mean? I don't understand the question. How did you determine where is inducement high? How did I determine it? I mean, the inducement high is really just the terminology we use from a high, from price just having that BOS to the downside, inducing sellers. So this high right here, if I could frame this high out, from this high, from this high to this low, what did we do? we induce sellers by taking out this internal low. So that would be my inducement high that I'd be forming out. So essentially, in order to understand the bias of the market to where it's going, someone is getting trapped and it's going the opposite way. Basically, yes. In the framework that we use for our model. I don't get what you're saying, Mia. That, if you look on the weekly, right? Notice how, let me clear this up for you. Okay, so we have this push-up LB. So notice how we have this pause here before this low gets taken. This little pause here. And then we trade lower. Boom. That lets me know, okay, from this area, we could potentially see some sort of build up here. It looks clear on the daily though. Basically, all this is just this right here. And then you just drag it out for future price action. That's all this is right here. Same thing would apply to on a lower time frame scale, but this is the higher time frame, so the price is going to take a while for it to essentially take out this area. Yes, basically last build before liquidity block. Exactly. What's our next higher time frame target on UJ? This inducement from the left. Is every high low is kind of inducing a high low, inducing buyers and sellers from somewhere, like reacting off of something and creating highs and lows. I'm trying to understand your question, Parm. I'm pretty sure. Let me see. Is every high low inducing buyers and sellers from somewhere, like reacting off of something? Okay, so what I can tell you is that most of the time, whenever we get some sort of move, you want to see what price is reacting off of. Like, if you're not framing out your chart to where you're making sense of it, this sell-off probably wouldn't have made sense to you. From this high to this low wouldn't make sense to you if you didn't see what price was doing to the left. So, notice how we have this not BOS, but POI that, retail would be looking to sell from. We trade into it, we have these this whole build up area to the lows, and we take it out, having that false sell-off, creating the liquidity block. So this sell-off is that, okay, now we have engineered liquidity above these highs. Now we can target these highs when we look for buys. So when we do this as well, literally the same scenario, we trade above here, we have those internal liquidity points because we have this breakage structure above and we respect this high to the left. So what we do is we induce buyers and then we trap them and then we have an LB right below. So essentially, most of the time, if you look to the left, price is reacting off of something that's building liquidity and inducing trades. So in this scenario, we're building liquidity to the upside by inducing sellers. Do we have any more questions? Any more things that I can go over real quick? Nothing. A little quick webinar, guys. Hopefully next week we'll have something more in the markets that we can talk about. This week was, now that I look at it, it was not as dry as it seems, but in hindsight, in hindsight, we can see this clearly, but there was no trading for me on Thursday, so I wasn't able to get involved in these two positions, which were actually really clean now that I look at it. To make a move on the market, always check the left. I mean, you get most of your data from the left because afterward, charts always going to print on the right side. So everything you need to know is on your left. You need to watch this over again and again on lots of stuff. Yeah, I appreciate it, man. I appreciate it. Sounds more clear for me weeks after weeks. Yeah, whenever you just keep going over the content and, get your reps in, things are going to start sticking because, some of you guys may be coming from different communities and actually learning, SMC, and we're basically trading the opposite of that way. So it's kind of hard to do the unlearning whenever you see something that you're so used to. So it's an unlearning process, then a relearning process, and just focus on actually mastering the concepts, really, to where it's second nature. Sometimes I don't even need to draw out these boxes. We just see it. Who you reach out to for questions? I mean, you can reach out to any of us for questions. Type in the community. You can DM me. You can probably DM Adam as well. We'll get to you guys whenever we're not busy. But most of the time, most of the questions that you guys have are in the course. You just have to make sure you're watching the webinars as well. The previous webinars, there's a lot of sauce because of people ask most of the frequently asked questions that the members ask, and most of the time it'll get answered whenever you rewatch the old webinars. I appreciate you guys. Thank you. So I'm gonna end it here. I'll probably drop some sort of a midweek video, depending on how price looks on Wednesday. So I'll let you guys know. I'll keep you updated. I'll see you guys on Monday. Have a good weekend.